Hi, and welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian. And in today's video, we're discussing capital gains and if they can force you to pay taxes on your Social Security income.
Yes. For the most part, Michelle, those with Social Security income aren't even taxed.
No.
In fact, many don't even have to file a tax return if this is their only source of income. But when you sell an investment and realize capital gains, you may be forced to file a return and possibly pay taxes for that year.
Okay, so before we dive in, if you liked the content of this video, make sure you hit that like button and don't forget to subscribe to our channel. We have tons of videos, not only on Social Security, retirement planning, 401ks, even cryptocurrency, you name it. So make sure you hit that subscribe. All right, subscribe button, I should say. Finish the sentence, Michelle. All right, Brian, before we talk about how capital gains can affect Social Security, I want to back it up. Can you quickly just define capital gains, like one or two sentences, just to make sure we're all on the same page here?
Sure. Capital gains, Michelle, are created when you sell an asset for more than what you paid for it. It's that simple. This could be stocks, mutual funds, real estate. There's two types of capital gains, short-term and long-term capital gains. Short-term capital gains are assets that you hold for less than a year, and long-term capital gains are for assets that you hold more than a year before you sell them.
Got it. So a quick question on that. If someone has, let's say, a variable annuity, which is tied to the stock market, do they have to pay capital gains on taxes on realized returns, or does this not apply to annuities?
Great question. No, variable annuities are taxed as normal income when you withdraw the funds.
Okay. And capital gains are always taxed, correct?
No.
Okay. Talk us through that.
Okay. Short term. Okay. So here's the thing. Capital gains aren't always taxed. And why? Because short-term capital gains, Michelle, are taxed at your ordinary income rates.
Okay.
Yeah. Long-term capital gains are taxed from 0 to 20% based on other income. Okay.
Got it.
And just real briefly, think about this. Capital gains tax rates for 2021. If you're single, it could go, it's 0. If you're under 40,000 of income, it's 0. Married, file a joint, under 80,000, 0. So are they always taxed? No.
Okay. So question on this then, what if you don't sell anything in a year, like in a given year, right?
Mm-hmm.
Do you still get a 1099 for capital gains?
I knew you was going to ask me this. In some cases, yes. Okay, and here's how. Your mutual fund may have realized capital gains during the year. Okay.
Right.
And they're mandated to distribute to them, the shareholder, by year end. Okay. This usually comes in December. Okay. And you always hear this on CNBC is like, oh, we're coming in. There might be a lot of capital gains distributions in December this year because the market was up so much. Sure. Okay. Well, that's what we just did from 2020 and 2021. Your fund company is going to send you a 1099 with the amount of the capital gains and whether they're short-term or long-term, depending on how long they held them. Not you. You didn't sell anything. So in my opinion, because of the huge distributions in 2021, IRS posted a notice on their website. We're going to put that link below in the description. And the headline, Michelle, was IRS reminds taxpayers that their Social Security benefits may be taxable. Okay. And it's going to explains in there that you may have to pay taxes on your Social Security and that up to 85% of your benefits may be taxable. So nice little reminder there.
Great.
And on the site, it's also going to show you how to determine if your benefits are taxable. And it's a pretty simple computation. Take half of your Social Security benefits for the year. So if your Social Security was 30,000, take half that amount, which is 15,000, add it to your other income. That could be your pensions, investments, interest, dividends, and capital gains. And if you're single and your income is more than 25,000, then part of their Social Security benefits may be taxable. Married, filing joint, You take half the amount of your Social Security, half of your spouse's Social Security, and then add that to all the additional income in the household. And if the total is above 32,000, then part of your Social Security may be taxable.
Okay. And we are putting that link directly below this video. Go check that out for sure.
Yeah, definitely. And here's how the breakdown of these taxes work, because, today our whole premise was, can a capital gains distribution make your Social Security income taxable? Yes, it can. And here's the breakdown of how much you could actually pay in them taxes. So 50% of your benefits. So let's say now there's 30,000 or 20,000, 50% could be taxable if you're filing single, head of household, or qualifying widow or widow with 25,000 to 34,000 of income.
Okay.
Married filing separate and living apart from their spouse, 25,000 to 34,000 of income, and married filing joint from between 32,000 and 44,000 of income.
Okay.
So,
and that's 50% of
your benefits could be taxable.
Right. Okay. Got it.
Now, here goes the worst case scenario. So when I read someone's tax return, which is what most financial advisors that truly do what's right for the consumer, understanding that here's the tax implications of your retirement plan and everything else that's going on, you can see that up to 85% of a taxpayer's benefits will be taxable. And this is a massive amount, because people always complain and say, wait a second, I paid taxes in the beginning to get my Social Security. Now I got to pay taxes to receive my Social Security. It is because of these guidelines. If you're filing single, 85%, if you're above 34,000 of income, married filing joint, more than 44,000 of income, married filing separate, 34,000. And, same thing with married filing something, and you live with your spouse or not live with your spouse. So in closing, though, you can be forced to pay taxes on your Social Security benefits with capital gains. So.
Right. Really, it's about paying. You just have to pay attention, right, to your investment accounts, know the rules. Go check out that link below and watch in December, as you said, for, in each year, not just this one, for capital gains distributions that from your mutual fund companies.
It's funny, Michelle, there's not much planning that you can do on this, because they kick them in about the third week of December every year. If there's going to be a big capital gain distribution, you look for that, but you're not going to see it. That's the issue until you receive your January statement. By the time you receive your January statement,
the year's over.
The previous year's over.
Yes,
so you can't change it if you want to. Okay. So, and it does happen, especially after some blockbuster years in the market that we just had. So,
okay. This has been very informative. Thank you very much. Thanks to everybody who watched to the end. If you liked the content, hit that like button. Don't forget to subscribe to our channel so you never miss another video from us. Thanks so much, Brian. And thanks to everybody who watched.
Thanks, everyone. Have a great day.